of us. Yeah. Okay, cool. Okay, welcome everyone. We're at the webinar, Understanding Our Financial Statements. And this is really a webinar for you as our members to understand some of those reports that have been sent to you. But I want to begin by acknowledging the traditional owners of the lands that we're coming in from today. MHLEPQ operates on the lands of the Yagara and Turrbal people. And I want to pay my respects to elders past and present and any First Nations people and members joining here today. Sovereignty was never ceded, and the path towards reconciliation, truth and justice is both a personal and collective one for all of us. So luckily, we're here today, certainly not just hearing from me, we're hearing from the experts. And I've got two wonderful experts here today, Muralee and Peter, who are both on our board. So I might ask Muralee to introduce himself first.
Thanks, Simon. I'm an accountant, qualified accountant, and I've got some really good experience in terms of finance at various companies, various industries. I'm new to the not-for-profit industry, but I've been here for 2 years, so I've got reasonable awareness about what's happening here. Thank you, Peter.
Wonderful.
Yeah, thanks, Simon. Thanks, Muralee. Hello, everybody. I've been on the board of the Peak since day one and really value my time being on here. I also happen to be the chair of the Finance Audit and Risk Committee. I'm also a member of a number of different not-for-profits, and I've been on boards and I stay on the boards of a number of different not-for-profits. But look, the most important thing for you to know about me is I do not have a financial background.
That's good.
So we've got a kind of good interdisciplinary mix here today. And also, if you haven't had a chance, you might also want to look at the kind of 90-second video explainer that we sent out as well. So that can be a good way to sort of step into this video. It gives you a bit of an introduction on some of the three key documents we'll talk about today. But let's dive in. So a bit of what we're going to talk about today. We've got a little bit to cover, and we said we would try to keep to 15 minutes. So there's a bit of a what and the why. So what are the documents and why they matter? Then we actually go into the three kind of documents and get an explanation from our experts here about that. We'll talk a bit about the big picture. So, how are we going as an organization? After that, we'll actually start to unpack specific parts of these financial documents, like what's our current income, are we making a surplus, or, what's cash and stability for the organization, and then again, what does that actually mean for the future of MHLEPQ? So look, we'll dive in now because there's a fair bit to cover. We discussed that we'll keep it pretty conversational throughout though. So Peter, I might start with you. We're sort of at the what and the why. So we're really wanting to know, what is a financial report? Like, why do we need to make one? And what do the reports tell our members and anyone else who has some interest in us?
Yeah, thanks, Simon. Look, at any AGM, I'll admit some people close their eyes at this time when the financial reports are presented, but they are really important documents actually, because they tell us a few things. They tell us, is the board on our behalf looking after our money as members? That's the most important thing, and are they looking after it well? Secondly, I think they tell us if we're looking after our money not only today, but we're looking after our money into the future. So are we sustainable as an organisation moving forward? And lastly, they're really useful. Government bodies do read our financial statements because we're utilising public money, and they know that we need to be accountable to the money that they give us as a grant, but also that we need to be accountable to our members, you guys.
Yeah, and so on that question of accountability, Muralee, couldn't we just end up making all this stuff up? Yeah, couldn't that be what we're doing?
Yeah, and that's where the board's role, Simon, is that we got different layers of protection. And the first thing is our accounts are independently audited by an accounting firm, and they have to do it according to certain standards, well established, which is the same standard which large companies and every other organizations are governed by. And they do a clear audit and then give us a report, what I call is the audit report. In that report, in this case, we got a clean bill of health saying that our accounts are, in simple terms, correct. And those financial reports and the audit reports, and then come to a subcommittee in the board, which is called Financial Risk Committee, which Peter and I are members, and we go through another layer of questioning and reviews with the auditors and the management. And once we are comfortable, then we recommend to the main board, the whole board, for them to approve the financial statements. So that's a sort of a stepped process to make sure the financial statements are correct and reflects the real story of the entity, in this case, Malik.
Yeah, that makes perfect sense. Well, so one of those key documents that you often hear people talk about as a P&L or a profit and loss. Muralee, like, what is a profit and loss?
Now, I like to use the term income and expense statements, which is a bit more descriptive. A profit and loss, the same thing. It's much easier to understand in terms of, if you look at any entity, you have income and expenses. The difference is income or expenses, or profit and loss, profit or loss. So in our case, the grants and any income you receive is called income, and then you have expenses, which is rent, labor cost, and all those things. And the difference is what we get as a surplus. So that profit and loss is the core documents for any entity, which reflects what's happening in the business.
Yeah. And Peter, what do you want? What do you want to be looking for in a income and expenditure or P&L document when you're looking at Malik or a similar org?
Yeah. So look, generally speaking, what I'm looking for is to see that the income is higher than the expenditure. So that's really important. And it doesn't happen every year for every organisation, but generally that's what you want to see happening. And if it's not happening that way, and if it's not happening over a number of years, it means that we're spending more than we're earning. And ultimately, like in any place, and in any organisation or any household, if you spend more than you earn, ultimately that's a long-term problem because you can go broke. So that's not a good thing. But so that's what I look for. Is the income for the year higher than the expenditure?
Yeah. Okay. Well, I think that's a pretty strong foundation. That's probably one of the most important documents you'll be reading in the financial pack. One of the other key documents we've been talking about is the statement of financial position, or it's often called a balance sheet. Muralee, what is this document?
Simon, I think the financial position of the company, or it's called balance sheet, is a slightly bit more complex compared to the income and expense statements. So what it says is, what is your financial health? Like if you take an individual case, like if you take a household, take a simple example, you borrow from the bank and buy a property. Your property is an asset, your borrowing is a liability. Both together makes up your balance sheet. But it's more complex than that. But in our case, that is what the balance sheet is. Like you have cash, which is an asset, then you have to pay someone money, that's a liability. You have to receive some money, that's an asset. So all these combined explains the state of affairs at a certain point in time. How does your balance sheet look like? So when you talk about the balance sheet, it shows the financial position of any entity, which is made up of assets and liabilities, in simple terms.
No, that's great. And I mean, Peter, when you're, if you're looking from that non-sort of accounting perspective, what are the kind of the two key lines that you're looking for, and how do you make meaning out of that?
Yeah, I'm glad you said that, two key lines, Simon, because there are two key lines that I look for first and foremost, and that's the current assets and the current liabilities. So I do a comparison. So in my simple terms, I think the current assets that's what we own, and the current liabilities is what we currently owe. So if the liabilities are more than the assets, again, as I said before, that's a real problem in the long term. So we want to make sure that it's positive. And if it's not, we need an explanation for why it's not. But so that's what I'm looking for. Are the liabilities lower than the assets, or the assets higher than the liabilities? That's what I'm looking for.
Brilliant. And I mean, wouldn't it be better Peter, if we were just making like heaps of money, like we've obviously got a bit of a bit of sort of a positive variance there, but wouldn't it be great if we were just making like $1 million each year?
Yeah, it's a really good question, Simon. I think it's one that gets asked a lot. Ultimately, we're in what they call, we're not for profit, and that ultimately what not for profits do, we deliver services. So we don't want too much profit because that could mean that we're not actually doing anything. We're just squirreling away money. But you do, like any organisation, any household, really, what we want to try to do is squirrel away a little bit of money for a rainy day. So we want to have enough money for a rainy day, but we don't want to have too much because that means we're not doing what we need to do.
Yeah. So it's kind of a bit of self-protection, but making sure you're doing your mission at the same time.
Exactly.
Yeah. Actually, Muralee, I might go to you. Like, we've got a bit in here about assets, but practically speaking, for an organisation like us, what's an asset that we're likely to have inside of Malik?
I think cash is an asset. Obviously, when we get the income and we're going to save cash, whatever we don't spend sits in the cash. That's an asset. Likewise, if you invoice a client and that money has not hit your bank account, which we call an accounts receivable, I think trade and other receivable, it'll sit there. That's an asset. On the other hand, someone has sent you an invoice for your rent, and we are not paid that yet. That will sit as a payable. So those are the type of classic examples. You'll have computers you bought, which will be an asset. So lots of assets and liabilities. In our case, those are some of the key, because if you look at a different entity or different industry, there'll be aircraft is an asset, and those sort of complex things. But in our case, it's fairly simple.
Yeah, no aircrafts just yet. But let's move on to our next document. So we've kind of got the cash flows document, and when we were talking, you gave me a bit of a warning, Muralee, about this doc, and just moderating, I guess, what we should expect in trying to make sense of it.
Yeah, the cash flow is slightly complex, and I think for us, generally it's similar, because we don't have too much complex accounting transaction involving cash flow versus non-cash flow. But if you look at a different industry, I'll use the same example as an aircraft or a property or those type of things. Some of those things won't be in the profit and loss. It'll be in the cash flow. So in our case, we don't have too much of a difference. So what cash flow shows, I'll take an example. We look at the profit and loss. Imagine if we didn't look at the cash flow and suddenly Simon goes ahead and buys an expensive car because he doesn't like to use his own car. That won't appear in the profit and loss, and that will only appear in the cash flow. So that's important for us to look at the cash flow, and otherwise we won't pick. So in our case, thankfully, Simon is not interested in buying expensive cars. We don't see too much difference between cash flow and profit and loss. But in a sense, it's almost similar than this timing differences of some basic items like rent, which has not been paid. It'll be in the profit and loss. Once it is paid, it will hit the cash flow. Simple as that. Over to you, Simon.
Thanks, Muralee. Yeah, and Peter, I know you were trying to also think about, well, if there's anything to make out of this document for members, what would you take from it or get them to look for?
Yeah. Now, Simon, I'm going to answer this at 2 levels. The first level, it's what might be useful for members to know. And the second thing, I'm going to let people on a little secret about what they really need to know. So the first thing is, when I look at a cash flow, really what I'm looking for, it's telling me where we're spending our money. We could spend our money in operating, which is delivering services, doing what we do. We could spend our money in buying lots of assets. We could buy a building or buy heaps and heaps of computers or buy cars, or we could spend money investing the income we have in some kind of account, long-term account or investment account. We're a service delivery organisation, so the money's largely going to go into operating. So it's telling us where we're spending money. But this is the second level. This is the little secret. This is a really complex document, and in our case, for like a lot of not-for-profits our size, as a member, I don't worry as much about this document as I do about the other two. It's at the end of the day, the bottom line, the figure at the bottom is the same as our profit and loss, or pretty similar to it. So that, you know, if you really don't understand this document, I don't worry too much about that. It's the other two documents. So, but it's, you know, in simple terms, it tells us where we're spending our money.
No, that's helpful from both of you. Well, let's move on to we've kind of now really covered the three documents. And as a reminder, that video that we mentioned, the 90-second video, kind of covers some of this as well. So, you know, you can always go back to that as well. Let's move on and figure out, well, what does this actually mean for us big picture? So Peter, you know, what does our financial report tell us about the health of MHLEPQ?
Okay, so I'm answering this both as a board director, but also as a member that's looking at these documents. So I think they tell us that we're healthy financially. I think they tell us that our income is higher than our expenditure, so that's a good thing. It tells us that our assets are higher than our liabilities, so we own more than we owe. So that tells us that we're healthy. And as Muralee pointed out before, our external auditors actually agree with us.
Yeah, well, and then Muralee, you were mentioning that earlier as well, and we've got the screenshot of the audit report here. What's the significance of that auditor report for us?
I think even something like the important thing to understand is as the board, we don't work in the company. So for us, as responsible for governance of the entity, we rely on different levels. Obviously, it depends on the management, having the right people. Then we have a subcommittee which focuses on financials, risks, and making sure that's done properly. And then you have the external auditors. And these external auditors, what they do is no different to any other companies. They have different standards. So in this case, the fact that they've given us a clean audit report, which says, as you can read, is giving a true and fair view of the company's financial position and is in line with the accounting standards. So that's what we want to see, which means they've done the work and given a pass mark to make sure that our audit report, our financials are correct. We call it true and fair view in accounting terms, but in simple words, in simple terms, it's correct and right. That's what we look for.
Well, that's good news. So let's move on to specific items that people often have questions about. Peter, like, you know, it's when you look at some of these documents, it identifies that we're spending a fair bit on employment. Why is that?
Yeah, the really common question. Everyone goes, "Oh, look, all your money is going on employment. You know, what are you doing?" If you think about us as an organisation, we're very different from a lot of we're different from a lot of for-profit organisations. Say a manufacturing organisation, they make things. Let me call them widgets. So they make widgets or products or whatever you want to call them, but I'll call them widgets. So they make widgets. We don't make widgets. We deliver services. So our widget are our people. And that's why in not-for-profits, most of the money is spent on our people, our staff. That's what it's all about.
That makes sense. Well, and so we've got, you can see in the financial reports, we've got a surplus of $160,000. We kind of touched on that a little bit earlier, but Peter, could you give us your sense on the significance of that?
Yeah, look, as I said before, you don't want that surplus. You want a surplus ideally, but you don't want that surplus to be too high. If it's ridiculously high, then it means you're probably not delivering services. But if it's not high or negative, it means that you're not able to put money aside for a rainy day. So it's finding the right balance between delivering services but making sure that we're going to exist in the long term. So it's really good to have a bit of surplus to put money away for a rainy day. But like any household, some years you don't get to have a surplus.
Yeah, understandable. Well, we're sort of at the end, really. What does this all mean for the future of our org, Peter? You know, what's I guess people can draw their own conclusions, but maybe a message for our members about the significance of all of this.
Yeah. So what I would say to our members is, you know, just to remind people that we're still a relatively new organisation. You know, but things are looking good, I think, because we've got money put away for a rainy day. We're starting to build that up, even though it's relatively small. we're starting. But as a small new organisation, I'm reasonably confident that on where we're at the moment, because you know the reports are telling us that financially we're healthy today, and that moving forward, if we keep going in this direction, we'll be healthy in the future.
Brilliant. Well, thank you both, Peter and Muralee, for your advice and information on this. We'll see you all at the AGM. So ciao for now.
Thanks, Simon.
Thanks, Simon. Cheers.